They don't want what we know out there.
How a person can go from really almost nothing to becoming a millionaire by owning rental properties.
He would always buy these flip houses, and I just remember thinking, this guy is crazy. Why would he buy that house?
In the past decade, there's been a huge surge in the peer-to-peer short-term rental market.
Become an insider. So you have to know the rules before you get the game.
Every second counts. So make every second count.
Welcome to the Real Estate Jam. Whether you're just beginning or the best of the best, we're glad you're here. We will share successes, failures, and strategies for the action-taking real estate investor. And now to your hosts, JD and Melissa.
Hi guys, welcome to the Real Estate Jam podcast. I'm JD with my wonderful and talented co-host.
And cold
co-host. It's only 150 degrees outside. Melissa's wearing a sweater today.
But JD makes us keep it 58 in here. So
right.
It's like winter.
I'm surprised it's not snowing in here. Anyways, today we got a great guest, and I'm really happy to introduce you guys to DJ McClure. He's the VP of Sales and Business Development for National Flood Experts. DJ, thank you so much for coming on the show today. We really appreciate your time.
Absolutely. No, I appreciate you guys having me. Like we just talked about, we both have a special tie to the Panhandle. So
yes,
that's good karma for a good conversation.
Yeah, absolutely. Well, DJ, for people who maybe don't know what you guys do at National Flood Experts and what you do specifically, can you give us a rundown of, who you are, where you're from, and why you can provide some value to some of our investors that are listening?
Absolutely. Yeah, my name is DJ McClure. So I'm our VP Sales. I've been with the company 5 years. So we've been growing every year. We're a specialized engineering firm, and we work with properties in flood zones all over the country. Our corporate's based in Tampa. And so we help real estate investors, property owners, essentially to reduce or even eliminate the requirement for their flood insurance cost. Mm-hmm. So it's a bit of a combined expertise within our team. I kind of say we're right in the middle of a triangle between engineering, insurance, and real estate, as like an investor mindset. So we've built all these trainings internally, and we operate as a consulting firm to, do whatever we can to help, reduce, what can be a pretty dramatic insurance expense.
Sure, especially here in Florida, but I know it's happening all over the country with the natural disasters that have taken place over the last few years. In Florida, insurance companies are fleeing, and insurance rates are rising on regular insurance and especially the flood zone insurance. So I'm wondering, there's a couple of things that. One, what everybody listening to us right now cares about is, how do I, if I have a property that's in a flood zone, or if I'm thinking about purchasing a property that's in the flood zone for an investment purpose, how do I bring those costs down or eliminate them so that I can have a better return on my investment?
Sure. So it's important to understand why people are required to carry a flood insurance policy. That's kind of where everything is the foundation. So lenders have a compliance requirement they have to pass on to any buyer. Doesn't matter what type of real estate it is. If it's in a 100-year flood zone, they have to require that you have proof of flood insurance every year. And otherwise, the lenders get fined. So there's actually a consequence for them if they let something slip through the cracks. So that's kind of what it all bases around. So if a property is in a 100-year flood zone, you can expect to have that requirement. Well, there's actually programs and there are ways to work with FEMA, which is what our company does every day, to identify properties that have characteristics that are essentially outside the criteria of that flood zone. And so then we're providing this engineering information, a flood zone analysis to FEMA to show them that actually this particular building or set of buildings can now be outside of the 100-year flood zone. And so FEMA issues what's called a letter map amendment, or LOMA, you'll hear it referred to. And that changes the flood zone to X. And now the requirement from the lender is gone. So if you're trying to cut every expense and you're comfortable not having a flood policy, that's immediate cash flow positive revenue that you're seeing. Yeah. And a lot of people don't realize that's even possible.
Yeah, I had no idea.
I do. So are you talking like, okay, we got this house, let's just jack it up on stilts so it's higher, the elevation is higher, and now we can get them to rezone us? Or are you talking about something other than that?
It's a good question. Yeah, it's a common misunderstanding. We get a lot is someone will say, well, the entrance to my house is, or my building is 3 feet off the ground, or I'm on stilts. But unfortunately, it has more to do with the topography on and around the property. Not so much to do with how high the structure is actually built. So permitting restrictions are what dictate the elevations that properties are built at. So that's largely what the flood zones are used for. And so if it's a 10-foot flood zone and you go in to build, and that particular state requires that you have the first floor 2 feet over, then depending, all right, is the topography close to 10 feet, you can just build up the foundation. Or some areas of the country where you're 6 feet under the flood zone and the only way to get above it is to use, maybe something like stilts.
Okay. So now, what's the process, or what do you need to know? First, I'm sure there's some properties that you can't change the flood zone on. It's in the middle of a lake, or what should be a lake, and you can't do anything about it, or swamp here in Florida. But what kind of properties, or how do I know whether or not I'd be able to effectively change from AE or whatever the flood zone is to the X, where it eliminates the flood insurance requirement or significantly reduces the cost if I decided to get flood insurance in, like Melissa and I, on all of our properties in Florida, whether they're in the flood zone or not, we still get flood insurance. That's just what we've seen and learned and dealt with. A lot of the hurricane damaged houses that were also flood damaged, we just do it. But if we could figure out how to change from flood zone to non-flood zone, and then, that would reduce our costs tremendously.
Yeah, so it's unfortunate. So FEMA changed their insurance program, the rating system, in the last 18 months. So in the past, if the flood zone changed from like an AE to an X, the policy did actually decrease. They've taken the flood zone out of the formula. So now if you can get a map amendment, it removes the requirement, but it doesn't automatically reduce the cost anymore. So the way that they've constructed the policies now, they've kind of spread around the weight, if you will, across a lot of different variables. For commercial, the replacement cost value is something they've newly incorporated. And so it's a combination of things that's not as transparent as it used to be. But what they've done is policies now have what's called a full risk premium, meaning FEMA's insurance will tell you what the ceiling price is. So you can see what you're at today. Maybe you're at 1,000, and the full risk premium maybe is 4,000. So you can then anticipate that you're going to continue increasing by 18% every year until you get to 4,000. Now, there are ways that we can work with the carriers. You start dissecting all of those details. Think of it like a really good tax audit in a way, except it's a flood zone and flood policy audit. And we find details that we can improve or provide better data to the carrier and either lower the premium today or lower the full risk premium so that those subsequent years are not such a dramatic increase.
Okay. Now, as far as some strategies to help with acquiring properties in the flood zones, can you talk to us a little bit about that?
Yeah, I mean, I think it all goes back to your due diligence checklist, right? So too many times the flood zone can get overlooked and you get to the 11th hour with the lender or 2 weeks from closing, and all of a sudden those flood zone determination documents pop up letting you know that, hey, you got to have flood insurance for closing. Closing is like 2 weeks away. You're scrambling, calling your broker. I mean, we get these fire calls all the time. And I'm talking from like very experienced investors. So everyone can overlook this. So I say, look, put the flood zone in one of your initial, due diligence checklists, go to FEMA's site, pull the property and say, all right, does the 100-year even get close to any of the buildings? Because if it even like rubs up against the slightest, the lenders are going to flag it. Yeah. So that's step one. Step two, if you're under contract and you really want to dig into the details, you're going to have to find some elevation data somewhere. So if the seller doesn't have an elevation certificate, it may be worth either calling someone like us to do some approximations. So part of our process is we're not a survey company, right? So we're not trying to just sell survey work just because. So our team will do some approximations, some estimations to say, you know what, we think that this data could be beneficial. At that point, then the investor is spending some survey dollars, at least with a purpose. And with the data, then you can determine during that due diligence period, A, is that possible? And B, if it's not, okay, am I okay with what this flood insurance expense might be? And if you're okay with it, then you move forward. If there's a solution, all right, well, let's talk about that. Is this something that's going to make a difference in the project? Maybe you don't want to have flood insurance at closing because it affects your loan proceeds, right? You could still buy it after closing, right? That doesn't change that fact, but maybe not having that requirement changes the way that the underwriting on the loan might look, and maybe that helps your CapEx budget. So, this is what I mean by the triangle, right? So we've got to ask good questions and understand really the full situation. What type of loan program are you going into? What type of flood insurance requirements does that loan program dictate? And so we have this really intelligent conversation that's way more than just the flood zone. And we start looking at, it's like a prism, and you start looking at all the different angles. And if there's a solution that makes sense, then you decide how you're going to tackle it.
Sure. That makes sense. One of the big problems that we're seeing in this area, in the recent past 6 months or so, is that FEMA's come in and they are redrawing some of our flood maps. That's putting investors whose properties weren't previously in the flood zone right into it. And we're seeing a lot of problems with that. Do you have any insight or information that would be beneficial to single-family home investors or multifamily home investors that kind of stuff is happening to?
Yeah, it's a similar process. Really, it's about getting some hard data so that you can then have someone like us do that analysis to see what options are possible. Because anytime a new flood map comes out, you got to remember FEMA is using data from years past. Mm-hmm. It's not like, data from Hurricane Ian is already having that quick of an effect. You're always a few years behind, because for most parts of the country, the flood maps don't change, but every 10, 15 years.
Right.
So you can imagine they're using data from several years back. So anytime a flood map changes, we see it all the time across the country. There's going to be properties that are brought in. There's going to be properties that stay the same. And there's going to be some properties that maybe something changed to where there's some opportunity. So it's worth, anytime the flood map's changing, if anything is being affected on your property, get some, professional to take a look at it, to where we can look at the data, look at the new flood map and say, okay, did maybe you just get grouped in the masses, but your property can still be taken back out of the flood zone like it was before?
Sure. So I'm wondering, as an investor, there is a certain, is the juice worth the squeeze? So, how much do these kind of consultations cost, and how do I know whether or not it's worth it for me to even go down that route?
It's a great question. Yeah, it's something we talk about with people all the time. The initial desktop review that we do for clients is no cost, right? Because we don't know going in if we can even help. So we request some of the flood insurance information, the elevation information if they have it. So we want to get the data. Our team will go through the property, and there's no obligation or cost to the client to then do anything. But now they have some kind of potential resolution. So at that point, then we're talking about, depending on what type of project it is and what type of property, what that cost might be. So if they don't have any elevation or topography data, that's the only time, one of our clients may have a cost up front. We do have an in-house field team. So we send them all over the country, to get raw data that we need to do our, different analyses. And, at that point, it's really going down like a bunch of flow charts and saying, okay, what different solutions might, apply here. Mm-hmm. And then having a conversation with the client. Whatever solution we found, does that even benefit or solve a problem for them? And if it doesn't, we walk away. And if it does, then we talk about what that particular project's cost might be. A lot of projects are somewhat in line with, what their flood insurance cost might be. And so at that point, you're seeing some kind of reduction year over year to cover that return on investment.
Okay. Well, now a lot of our investors, the investors that we work with on the investment side, the retail client investors that Melissa have, a lot of them, and I don't know if this is because of public opinion or media bias or what causes it, but a lot of them just flat out say, hey, I don't want to look at anything in a flood zone. And I know that, one, if the numbers make sense, it doesn't matter if you got to pay $10,000 a month for flood insurance. If the numbers make sense, it might still be a good investment. But for those people who are just flat out saying, no, I don't want to see anything in the flood zone, do you have any pointers or recommendations for them, or do you guys try to steer people away from flood zones and just happens that there's some opportunity and they reach out to you?
Yeah, another great question. I mean, the flood zones are everywhere. It's not just the coast, right? So we do projects in 40 plus states every year around the country. So anywhere there's a river, creek, stream, there's possibly a flood zone. Obviously, you guys are on the coast, so you've got coastal, impacts to think about and hurricanes. So, in terms of risk appetite, I think that varies from person to person. Mm-hmm. Like you guys are going to carry flood insurance, like you said, on everything regardless. You've got people on the opposite end of that spectrum that want to carry the least amount of insurance possible as well. So I think having a criteria for yourself as an investor is important.
Sure.
I have my own criteria as an investor, and if the deal doesn't fit, then that's okay. There's probably somebody else with a different criteria. But if someone likes a property and the flood zone is a variable they've identified, this seems really elementary, but I tell people all the time, talk to some of the neighboring properties, right? What's the worst they've ever seen? What happened when the hurricanes came through, right? We just had all those hurricanes that hit Fort Myers. At the surface, everyone thinks that whole region of Florida was underwater, but there were properties that didn't. Mm-hmm. So you got to just do a little bit of really basic due diligence in that regard. And then depending what you heard, okay, do I want to go a little further? Maybe now I start getting some elevation or topography information and start figuring out, is this property pretty level with the flood zone? Or is it 4 feet under? And it wouldn't take much for water to really reach that property. So some basic things there, I think, can really tell you some big picture items.
Sure. So if we add checking the flood zone to our acquisitions checklist, hit it up on the front end, that way we can head it off before it becomes a problem 2 weeks out from closing or a week out from closing. If we make sure that we understand our own risk profile and what kind of investor we want to be, and then if we have problems in regards to flood zone, reaching out to somebody who understands flood zones and can consult on that is probably the steps that you'd recommend for newer investors or people just getting into the real estate investing space, either single family, multifamily, et cetera.
Yeah. And the last step is something that's really unique to flood insurance is that, so JD, if you're selling a property to me and your property has a flood insurance policy through FEMA, I can actually assume ownership of that policy at closing. So other types of insurance, you typically can't do that. So why that's really valuable. So like I was telling you, the rating system for FEMA's insurance program just changed. So in years past, if your broker wrote a policy and my broker wrote a policy, in theory, their numbers would have been the same. Now, with the new rating system, because we have this full risk premium and now FEMA's established what that ceiling price is, if your premium is say $1,500, but the full risk premium is $5,000. If I go and have my broker write a brand new policy, it's going to come in at $5,000 from day one. But if I assume your policy, then I adopt your policy at that $1,500 price point, and then I'm only going to see gradual increases every year after. Now, that's a savvy investor thing to know. And I'm talking career insurance brokers, career real estate brokers, do not always know that detail.
Sure.
And like I said, it's because in years past, it didn't really matter.
Yeah.
But now that particular detail can really make or break the difference for some investors.
Yeah, we've definitely experienced that on both sides. The piece that we think is important to highlight is you need to have that discussion before the property closes, not after. If it doesn't transfer or you don't get it in process before the ownership transfers, you're going to be SOL.
That's right. So, to kind of review the process, step one is start doing some initial due diligence, right? Look it up on the flood map, go a little deeper, do some local investigation, get some survey data, have a company like ours take a look at it, see what's possible. And if there's a solution to get out of it, you can go that route. If you're going to have to keep flood insurance at closing, start talking to your broker early in the process, figure out how you could potentially assume the seller's policy if that's beneficial. And this is the case for X zones as well, right? We're not just talking about 100-year flood zones, because in the past, X zones had standard pricing. And so a single family home might have been $400, 2-3 years ago. You go get a brand new policy, it could be $4,000. But if you're buying in an X zone and the seller has a policy and you want to keep one, see if you can adopt it, because that policy might only be $600-700 by now.
Yeah, that's really great information. Well, DJ, if our audience found some value and maybe they have some more questions or they have interest in finding some consultation for their own investments, where could we send them?
Yeah, please have them send an email to info@nationalfloodexperts.com. And that'll go to our team. One of our sales reps will follow up, likely same day. Can go through this discovery process, answer a lot of questions, really point someone in the right direction. And then our website, nationalfloodexperts.com, we just rebuilt it this year with a ton of, really valuable information for investors. You can go on, and if you're a single family, if you're a condo, if you're multifamily, there's a category for you. And you can go in and there's some really nice nuggets of information that are unique to those verticals of real estate. And we also added, a testimonial section. So just like these podcasts, except they're just 3-4 minutes. And you can really hear from somebody else on, how some of these solutions benefited their property. So it's all about knowledge.
Yeah, absolutely. And we really appreciate the knowledge that you shared with our audience and us. We oftentimes use these podcast episodes to learn more about the things that affect our business. And this is definitely something that we think about on a daily basis. So we really appreciate your insights. DJ, thank you so much for coming on and spending some time with us.
100%. Yeah. I hope that there's some good nuggets that help somebody down the road.
Yes, for sure. Thank you.
Thank you for listening to the Real Estate Jam. We hope you enjoyed today's episode. For more information, check out our website, therealestatejam.com, or find us on Instagram, Facebook, and Twitter @TheRealEstateJam. If you have any questions, feel free to drop us an email at therealestatejam@gmail.com. See you next episode.